Get everyone in here. Perfect. Hey, welcome everyone to Whistling Consulting's May 2025 webinar. We appreciate all of you guys attending and just can't express the gratitude we have for you as customers and comrades in the solar industry. That's always a solar coaster, right? And what we found that we really like to share is not only our culture, but in connections. We believe as the industry, switches back and forth, that collaboration instead of competition is one way for all of us to survive in this ever-changing industry. So we appreciate you being on board and attending this webinar and sharing your insights today. I want to do some quick introductions. As always, I want to introduce Scott Whistling, the captain and owner of Whistling Consulting. You are the captain and owner, Scott. He shakes his head. He's really brought together a team here. We have Catherine Kelso, who has been in the industry in designing since 2005, who's also passed her PE exam and is going to be an EE here. So we're excited to have her on board. Greg Elvestad, our rock star, our director of electrical engineering, who has over 30 years of experience in electricity, probably longer than that, he says, as he played with it as a kid, but danced in the utility companies for about 25 years and has been in the solar industry for the past 10 years. We have Keith Harpster, who is our director of structural engineering, who always brings the good looks and to everywhere that he goes. And so I just want to again say thank you. I'm going to turn the time over to Scott to do a little more in-depth explanation of who's here and introductions. Go ahead, Scott.
Thanks, Ben. Appreciate what you do in keeping us in order here and making us all look good. And thanks everybody for joining. It's great to have these webinars where we get together as a group and we chat a little bit about what we know in the industry and what we don't know in the industry. And it's just a great, I really love these to be roundtable discussions. The last one we had was just a great discussion where we didn't have a ton of stuff planned, but we started discussions and everybody kind of interjected their thoughts. And I really do want you guys to contribute here. We have asked a couple people if they would share some insights with their expertise in the industry. And some of them are, we have Toya Eval, right? I've stressed out more about pronouncing people's last names than anything else today. So did I get that right, Tua?
That was perfect. Thanks, Scott.
Okay. So Tua, he works at B10 Energy, and he's going to be talking a little bit about transferable tax credits and some financing options for the commercial industry, right? Which I think is everybody, I think everybody will profit from that. And then I asked Sue Burson and Aidan Corper from Highland Fleet, one of our customers, who they specialize in EV chargers. I asked her if she could share some insight on available programs for EV that are there in the industry that I think will help us all. And then I've also asked Peter Breihoff, who is one of our customers from Skyline Solar, and he has worked with several different financing companies, and I think he's going to share a little bit of his insights there as well. And then Catherine, I've asked Catherine Kelso from Whistling Consulting if she could talk a little bit about the REAP program, which we have talked about in the past, but I think that Catherine would have a better insight into that, the Rural Energy for America program. And then if we have time, I'm sure that everybody on the forefront of everybody's mind is this bill before the Senate at this point about eliminating the tax credit. So if we have some time, maybe we can chat a little bit about that. And again, I'm happy to switch things up. If you think we need to spend more time on certain topics, you're welcome to we'll open up the chat and you can drop questions in there as we're going along. Ben, I'd like you to kind of monitor that. I'm just on my laptop, so I don't have a lot of monitors. So I just want to focus on the screen here. So anyway, so with that, why don't we see if we can ask who wants to be first here? How about Tua? Do you want to jump in and maybe talk a little bit about the transferable tax credits and what you've been doing in that forefront? If you want to take a minute or two to talk about that.
Yeah, absolutely. So a little bit of background on on B10. So we're a tax strategy firm, tax advisory. That's kind of what we do. That is what we do. And the credits have been a big part of our wheelhouse for the last couple of years with that. There was, when the IRA came out, there was, with the transferability, just in the first year, I think total amongst all the available credits, there was like $180 billion that went back and forth between all the projects and people qualifying and investors and things like that. So what we do is we look for and source great partners on the build side for good quality projects that that can be vetted easily and quickly, and look for a good partner. And because typically what happens is there's on a commercial project, let's say there's a
Uh-oh. Did Tua freeze, or was it me? You froze a little bit there, Tua.
Oh, can you guys hear me now?
Yeah, we
Yeah,
can
we
hear you
can hear
fine
you.
now.
Okay, where did I cut off at?
I think when you introduced yourself.
No,
No,
you're
I'm
talking about like
joking. No. I'm
qualified
joking.
projects. And then you're going to give an example of a project, or
Okay, yeah. So just a quick example on a project and how the credits work. Let's say you're building a $10 million commercial project. That project is probably eligible for around a $3 million tax credit, right? Well, the owner of that project, and sometimes it's a developer, sometimes they're building it for somebody else, whoever owns that project, those credits are now valuable on the open market. That's what the transferability of the IRA Act amongst the credits is, what it allows to do, right? And so that owner of credit can then sell those credits, right? It's a way to get additional funding in, right? So let's say that $3 million credit, and I'm, don't quote me on this, but let's say it's worth $2 million out on the open market. Okay. Well, from our experience, in tax strategy, we're the firm that CPA firms, investment advisors call after they've done all they can do on the tax side, trying to reduce their clients' taxes. They call us and say, hey, Tua, we've done all we can do. What else is there? Right. And so we're the what else piece. And so this renewable energy tax credit now becomes valuable in the open market. So for a company, for instance, that has a $3 million, tax liability for this year, if they can buy $3 million worth of credits for $2 million, that's a win-win, right? So the project owner gets an injection of $2 million. The buyer of the credit gets a $3 million tax credit, right? But they only paid $2 million, right? And so it's a win-win-win all the way around. And our experience has been there's really no shortage of buyers of credits, right? So I'm glad I ran into Ben at the show, and the hard part for us is finding good quality projects, and typically the ones that know where the good quality projects and builders are the guys that do all the design and engineering. So that's why this conversation with Ben and Scott has been super helpful. But that's kind of the gist of how the tax credits work, right? So if you have a project owner, let's say you're building something for somebody, right, and they own the project, ask them about what are they doing with their credits. Sometimes they use the credits themselves, which is totally fine. But if they have no need for the credits, right, that's an opportunity, to bring somebody like B10 to the table and say, okay, can we find a buyer for the credit in there?
How much of how long does it take? So if you're buying $2 million worth of tax credits for $3 million, how long do you have? How long does the tax credits, is it in that bill that we're talking now, like 2029 that they get it? I mean, how do you recoup that credit if you were to buy them?
Yeah, good question. So it depends on where the project is, right? On what stage it's at, right? So as soon as it goes into service, now that credit is eligible to be transferred, right? And let me back up for a second. As long as that project has incurred the 5% safe harbor rule in terms of starting the project, right? They bought equipment, they're moving forward, right? Then that qualifies as a start date, right? And then what happens is now, okay, we can figure out what the deadline is or what the timeline is on when that project's going to be finished. and we can line up the buyers of the credit, because the buyers of the credits, they have to make quarterly. These are companies, right? So they're making their quarterly tax payments anyway. So a lot of times they'll just prepay, or they'll buy the credits up front, or they'll buy them quarterly, right? Instead of sending money to the IRS, they just buy the credits. And then we help them with the election transfer statement to make sure everything lines up and they get the credit and all that. So to answer your question, it just depends on, like for instance, if somebody wanted to buy $3 million worth of credits today, we have projects that are finishing this year that we can line up and say, okay, they're probably going to buy $700,000 worth of credits a quarter, right? And so we line up with the projects that are going to be online and in service by then, and then do the transfer from that way.
Okay. Makes sense.
So for example, so if you're buying $3 million worth of tax credits, that $2 million, how often do you get that $2 million? Just say I own a commercial building, I want to expand to another commercial building. Does the project have to be completed first before I get the first, or they come in tranches, or is it one lump sum?
In terms of the credits?
No, the actual the $2 million, when does that get transferred to the person that's selling their credits to your
Oh,
investment?
yeah. So typically we'll take the payment for the credits, it's sort of a prepaid model, right? And there's some ways we can do it at the end, right? With a letter of intent where you commit to buy that at the end of the year. So we have some that at the end of the year, they're just going to buy everything they need for the year in November or whenever, December, right? But for the most part, people will just, all right, let's just pay it quarterly, because we're going to make those quarterlies anyway, right? And then what happens is now we have that transfer election, right? And then we just assign, like, okay, here's your credits for here. There's another batch of projects finishing up now. This is your projects. And the project owner, the credit buyer will have, it's typically a full data room about each project, right? So they can see what's going on, right, with each one. But that's usually how it works.
And the credit seller, when do they get their $2 million? Then we have a lot of commercial, customers here. If they want to use this as a sales tactic.
Yeah.
Hey, obviously we got this project. We can possibly get you X amount of dollars up front if you want to sell your credit. When would you actually receive the $2 million as the credit seller?
Yeah, it's fluid, right? So as soon as the buyer of the credit, right, they fund it, and then we handle the transaction, and then we're off to the races, send their funds to the builder or the credit owner.
Okay. Does the project have to be complete to do that, or do you just have to have a letter of intent? Or
it does not. So if you have a letter of intent to buy, then that can work as well in some cases.
Yeah, that's a great way to sell more commercial projects. For sure.
I'm curious if some of our commercial customers or commercial participants on this call, if they have used tax credits, and if they have any ideas or thoughts that maybe they could share about the process that Tu is talking about. Is there anybody here who has done some commercial with the tax credits?
Transferred them.
And can people raise their hands? I know that we control mics, but
Yeah, not seeing any raised hands yet.
no big deal if no one has anything to say. Maybe this is something that you may look into. And Tu, are you happy to drop your contact information in the chat? And I'm sure we'll come back to questions related to the tax credits as well as we move on here too. But yeah, no, that's certainly, I mean, the idea of getting a group of people like we have on this call together is there's got to be enough knowledge between all of us that we can help each other to be much more successful at what we do and learning, right? So actually, any other questions at this point? Maybe we could slide over to maybe Peter, if Peter is able to, are we able to get Peter's mic ready to work? Are you there, Pete?
Yes. You just have to
my mic. Yeah, my mic is not working. I can't get my picture to come up. Not that I mind, but
we did that on
trust me,
Peter.
Pete. We don't want
Yeah.
teasing you.
probably
That
better
was
off
the
that way.
Well, Peter Breihoff is the owner of Skyline Solar, and they do a lot of work. Most of their work, they're in New Jersey. And so they do a lot of residential, but I know that they work with several of the finance companies or funding sources that are in the industry. So, and we've been helping him with quite a bit of those. So I thought that his insight would be super valuable, and what he's experienced with some of these finance companies and the good and bad for them. So, and I know we've had a lot of ups and downs in the with funding sources and funding companies as of now. But anyway, Pete, if you want to share a couple ideas and thoughts with us, that'd be great.
Sure. So, it's interesting. The insight I bring is an interesting perspective, because we don't do mostly residential. We do almost exclusively residential. We will take some commercial jobs that, if somebody's giving me 20, 25 jobs a month and they come across a few commercial opportunities that are, 100 kW or less, I'm interested in those. Those are right. It's just the way I'm built. We've been in business 15 years. As Scott said, we did start in New Jersey, and we have expanded over those years into covering the entire Northeast, including Eastern Pennsylvania, Connecticut, Massachusetts, Rhode Island, and Southern New Hampshire, excuse me. And, for the previous 2.5 years, what was interesting was that we were as close to a quote unquote Sunnova house as you could be. And 95% of my jobs were Sunnova jobs, and they were bringing jobs to me. I had outside sales originators bringing jobs to me, and we had pretty much, for those of you who have any familiarity with Sunnova, they were not the easiest 3 years ago to satisfy with photos and everything they required. And I used to joke around and say, it was almost like cracking a safe. Once you figured out the combination to Sunnova, it actually made, and my team became very, very diligent and successful with getting jobs submitted and getting paid. Because at the end of the day, that's what it's all about. It's like, do the installation, get the required pictures, get it submitted, and get paid. And in the Northeast, outside of Trinity Solar, Skyline Solar was the only tier 1 EPC that Sunnova had. And what that meant to us was that 97% of all of our submissions for payment were approved on the first go around, which was good. That meant we were providing what they call partner packs, and it had everything they needed. And then what happened was everything, kind of hit the fan with Sunnova, and a lot of our sales originators that are working with us wanted different options, and we had to very quickly adapt to that. And Sunnova wasn't paying almost any EPCs, so we had to offer different lending strategies, and we quickly added, for instance, IGS, LightReach, Enfin, GoodLeap, PosiGen, all on our platform now. So we went from being primarily one lender to having to learn 5 different lenders, all requiring a different degree of photos in a certain order in some cases, and how they expected their milestone information to be delivered and uploaded was all different. At the same time that we were, Scott, and you're going to remember, just a few months ago, we started adding a different scope of work with Whistling, and it was work. So we were learning it as we were trying to teach it to Whistling's team, and it's been an interesting study, because we're still learning every single day how we can do things better, so we can crack that same code that we cracked with Sunnova, where we became really, really good, maybe the best in the Northeast at dealing with Sunnova installations. And we're getting there now with all these other lenders. So,
the key is, Pete, is what you said is diversification, right?
Yeah.
You went from being 95% in Sunnova house to now you've got 5 other lenders.
Yep.
And that's the tough part. And moving and switching. We read a book on Who Moved My Cheese. I don't know, a lot of you may have read it. It's a really small book, but it's a really good book, right? We're all getting our cheese moved in the industry now. And if we're not able to diversify and move like Pete has, that's where you're seeing a lot of problems with these companies, right? And a lot of them have folded, basically. Yeah. Yeah,
they have. And thankfully we were nimble enough and able to very quickly pivot and put ourselves and our sales originating teams, who have stuck by us because of our transparency with them and our willingness to figure this out for them and give them other options, that we have minimized our exposure to Sunnova. And it's been interesting because I don't know that I would recommend or say that one is more or less difficult specifically, but I can tell you that we've had better success with some of the lenders as far as satisfying them. But I think it's, again, I don't think it's anything inherent to that lender. I think it's just my team and Scott, your team for that matter, getting the process correctly and make sure we're getting them the information in the order they want at the time they want, and with a a completion percentage that they're looking for. Again, something that we strive to always be on the top tier of. That's something that I take that really seriously. So providing the experience, because we're an EPC without a internal sales team, and it's one of the benefits that I sell to all my sales originating teams that works with me, is I'm not out there actively selling against you. I have other sales originating teams that may be selling in your market. They may or may not have a different, red line, but I'm not out there selling against you. So you're not going to go into a house and find out that Skyline Solar has already been there and I'm undercutting you. And that's a big advantage to them. So trying to provide the right experience as this whole landscape changes right now, with the swing away from loans to, TPO products, both leases and PPAs, as the dealer fees went up like through the roof over the last 18 months. It was almost absurd, but people were still doing it because it worked, and constantly trying to adapt. And now with domestic content getting thrown in there and trying to make sure that we're, getting and obtaining the right materials to make sure that we're meeting the required percentages of using domestic content to satisfy the banks who are getting their bonus for using domestic content. It is a moving target, if ever there was one, in this climate. So I'm learning it right now. So that's why my perspective on this is interesting, because I'm learning it.
Yeah.
And
Well, I
implementing
think we're all learning as we progressed here, right? We've had to pivot as an engineering company too. Not, it's everybody needs to be pivoting and learning and growing. So that's important. But well, Pete, you've done a great job. I mean, Skyline Solar has been a dominant entity in the market, and you've done a great job. But I appreciate your insight. Thank you.
Yeah, Pete, I had one question for you. I don't know if you
Sure.
mind this or not, but is there one or two like finance partners that you felt have really been not easier to work with, but more consistent and more reliable?
Interesting. I hate to say that because I don't know who's on this call, but I will. I will, because I will tell you that the biggest thing to me is not just ease of use. Just like anything else, it's the support. It's the customer support that they provide when I need an answer, when I need help. Who's been able to deliver that? And that is sometimes more dependent on the actual account manager or who my contact is there, more so than the actual, whether it not be so inherent to the product itself. The guys at GoodLeap and LightReach have been extremely, IGS too. They're very, very responsive. And some of the others that have not been as responsive have been very open to the idea that we need to get better there. I equate it many times to these financial lenders that as batteries started to get rolled out over the last 3 years, they started to become way more likely to be sold as part of a PV sale. There was such little support, all from Enphase, from SolarEdge, from even Tesla for that matter. The support was so poor that every time my guys would go out to do a job and they needed some sort of technical support, they were put on hold. And I bonus my guys for getting a job done the same day that they started. And if they couldn't get the support, it was really frustrating. So we were experiencing some of those same frustrations from these financial companies because they didn't. So here's what happened, man. I can answer the question. It's actually interesting that you asked it. The way Sunnova changed everybody's perception and made everybody scramble so quickly. Everybody kind of ran to these other lenders in mass volume, and a
Yeah.
lot of them were not prepared to handle the volume, and much of it was based purely on their pricing schedule. So those who priced it, gave the best pricing for these TPO products, got a lion's share of the business, and they were not necessarily equipped to handle the influx of questions of support necessary. So they quickly learned, oh my God, I can't do this. And then that became an issue. Therefore, everyone ran somewhere else, kind of had the same experience over there. So they're all kind of figuring it out. But I would say that GoodLeap, because of their experience in this market, GoodLeap, as we all know, was Loan Pal before they were GoodLeap, and they had a lot of experience coming in, and their customer service and their ease of use has been pretty solid.
Perfect. Thank you.
Yeah, thanks, Pete.
Sure. Thanks for sharing that. That's important.
Any other questions for Pete while we're on the topic here? If you want to raise your hand, you can do that, or you can drop something into the chat. We can always drop back to it as well. So let's Sue Burson has been made a little niche in the industry working in EV chargers. Some of her projects involve solar, but most of them do not. And it's a little niche that they have has been, they work mostly for school districts who are looking to replace the buses that they currently have, and they're trying to promote green technology by using electric rather than fossil fuels, which is a great thing to be able to go home at the end of the day and say that you've made these changes like that. So we've been working with Sue, and I'm actually out in Texas right now. I had a site visit on one of her sites today, which went really well. So we give some time to Sue if your mic is on, and if you want, I don't know if her camera can work or if we just are not able to see anybody, but if you can turn her camera on, that'd be great too. But Sue, welcome, and thank you for joining with us today.
Thank you. I appreciate that. My camera was on, but when I turned my mic on, it turned my camera off. So I'm not exactly sure what's going on there.
Hold on a sec. How about now?
Oh yeah, there you go. Here, let me turn my camera on.
I'm getting more and more savvy with.
Perfect.
We learn. We all learn.
I could have
as we
turned
go
yours
along.
on, Peter, but I just.
Sorry,
I didn't
Pete.
like it.
Yeah. So yeah, like Scott said, we are EV electrification fleet vehicle company, and the majority of our jobs do involve school buses. So we are able to take advantage of a lot of grants and fundings that happen with that, along with some tax credits. Some of the things that we are able to actively pursue are the EPAs, of course, the Clean Bus School Acts round 2, 3, and 4. But we have different other types of incentives that we try and go after, as far as there are some tax credits that we're able to utilize. The 30C tax credit, which is an interesting one for us because it falls under what the credit is if you are, it's an alternative fuel vehicle refueling credit for the property that we own. And that includes the infrastructure, all of the equipment, everything. And my company actually owns our infrastructures. So that's nice. And if we meet other pieces of that tax credit, one, the main piece you have to meet is where the property is located. But two, there are other pieces that increase that tax credit up to $100,000 for that equipment, including prevailing wages and apprenticeships and things like that you have to make sure that your contractors are adhering to, and you have to get their information to be able to process those. But that's one type of tax credit. Another type of tax credit, depending on where we are, the AQMD, I think is, yes, the air quality management tax credit. That's something that we can access if we're in California. But there are other grants and other programs. We use, of course, state-run programs and incentives. And then with our infrastructure, we actually lean on the utility to help pay for some of the infrastructure up to the transformer and getting that transformer to the site. And there are a lot of utilities that have those incentives that help us out there as well. So we are a privately funded company. However, we do leverage a lot of those tax credits and grants and different types of funding sources to help our projects that we love so much come up, and be able to make those projects happen.
Well, thank you, Sue. Yeah, there's so many available options when it comes to rebates and credits that, I mean, it sounds like you could spend a career just trying to figure out and navigating through all of those options. So
Yes.
It's interesting.
Honestly, I'm not the guy or the person that puts in all of those applications for all those fundings and tax credits, and I don't really know all of the ins and outs of them. We have a team that is excellent that does that for us. Just as so, some of the people on here that do those types of things, and if you know that business, it's an incredible opportunity to take advantage of. It literally can make projects happen that were unable to happen prior to those financial helps, grants, tax incentives, and whatnot. And the nice part about that is, because of the way that our business model is, we don't just absorb those, we pass those on to our clients. So even though that they are a part of what we get because we own the infrastructure, we are able to put that in a way that brings the cost of what we're doing for our clients down. And so we are able to make projects happen.
Yeah, no, and that's great. It's great that you're able to do that. For people listening on this call, I would think that if you can put in a component of EV chargers and get to a school system that wants to do something with solar, right? Some of them may be able to absorb some of those rebates and credits that are there for, public entities like a school board, right?
For sure. But even outside of just the school board, we're able, just because it's electric vehicles in general, we're able to access a lot of that funding. And
So
then
it's not
once
just
we
the
add
school
in,
board, it's electric vehicles as well that there's a lot of credits for. And yeah.
yes, correct. So we pair them together. And then on top of that, when we start adding in other things such as battery systems and solar, we have access to even more money that will help. So it's kind of exciting and fun. Our industry is definitely not as familiar as solar, but there are a lot of things behind it that you can access that are very similar to solar.
Yeah, no, it's great. Well, I appreciate your insight and joining us today. It's been great working with you. And I mean, there's a lot of people who are really, really smart in the industry, and Sue is definitely one of them. And her husband actually works for Green Tech as well. So Green
too.
Tech is a large supplier. Get a plug in for Rich as well and Green Tech. But well, thank you, Sue. I appreciate that.
Yeah, no.
So Catherine, if you wanted to spend a couple minutes just chatting a little bit about the REAP program, that's something that people can immediately start using. And then I think we'll either open up for questions and see where we're at timing wise there. Maybe we can chat a little bit about how how the tax credits, if they go away, which, we've talked about this a lot. It's happened several times in the past 10, 15 years where they talk about that. But I think people are seeing that this may actually happen now, but maybe we can chat a little bit about that after Catherine's done. So, Catherine.
So I wanted to bring this up. The REAP program, which is REAP, and that stands for Rural Energy for America program. It's a government program. It's very open-ended. The main purpose of it is to increase energy independence. And a lot of people write it off because the rural aspect of it. But if you look at the map that they have on their website, it's actually only large cities that are excluded. So it's not where are you eligible to do this? It's where are you not eligible to do it? And that's in a major city. If you're outside of major cities, you can do anything you want. So it's very comprehensive in the amount of places you can do it. If you're just outside city limits of major metropolitan areas, you're good to go with this. So any small town, any agricultural production facilities or anything like that, or tribes. There's a lot of tribal corporations and tribal businesses that are getting these grants and loans also. But pretty much any private for-profit entity that's not in a major city can use these grants and loans, and they cover a very good portion of the project. The grants go up to 50% of the project costs, and the loans are 75% of the project cost. And the sizes are very flexible too. The minimum on the grants is 2,500, and the maximum on the grant is 1 million. And the loans are similar sizes. So, I mean, pretty much large projects, small projects, lots of things fall under these categories. And it's for solar, but it also can include other renewable energies like wind, hydrogen, geothermal, biomass. And it also includes energy efficiency improvements like replacing old, inefficient equipment. You can do doors and windows, you can do refrigeration units, lighting, insulation, all kinds of stuff. So not only could you put solar on, but you could get some other things for the same customer.
What about EV chargers, Catherine?
EV chargers are not on the list.
Oh, okay.
Unfortunately.
Sorry, Sue.
Yeah. But anyway, so it's really all encompassing. Quite a lot of different projects can fall under this. It's a lot of money. The grant money's free. I mean, there's no reason not to be applying for that. And, the loans are at decent rates and decent terms. So it's a good resource to try if you're doing any kind of project outside of city limits. And so it's something we wanted to bring up.
Is there a website that maybe you can, if you find a link, maybe you can drop it into the chat and people can just go and look and see if it's easy enough just to go in and see if their project would qualify or it's in that specific location where they can take advantage of that program. That would be great.
There's the link. And right now
yeah.
it's closed. They closed down for a few months in the spring, but it opens again July 1st for applications for the next fiscal year. So you can't do anything with it this month, but July 1st you can start applying for next year's funding. So
excellent. Cool. Well, thank you, Catherine.
And no, Blake, I don't think there's been any changes. There was a little bit of a fuss about DEI stuff. But other than that, the funding source has not, as a whole, has not changed with the new administration. So,
as of yet,
yes, kind of surprising, but.
Yeah. I had a follow-up question for Tua. In our conversations, I've known Tua for about 5 years. You talked about some funding that you guys offer, financial options or funding that you do outside of the transferable credits, if I understood that correctly, based on the project, right? Is that correct?
Yeah, correct. So it's a case-by-case basis. So our network has, because when a project gets built, part of the challenge the developer has or the project owner has is the financing, right? And so what has happened is, we would bring the buyer of the credit to the table with a letter of intent, and that lets the lender know, like, oh, okay, there's offtake here for these credits, so we're not the only one in the deal. There's skin in the game here. Right. And it makes it more palatable. So if for the right project, we can certainly do some introductions to some of our financing and lending connections. And happy to do that. Absolutely. So they're out there for sure.
Awesome. That's great.
Well, Ben, maybe we have a little bit of time here. Are there any general questions that we want to chat about, or otherwise, maybe we can talk a little bit about the the grenade that we can throw out into the crowd and see what everybody's thoughts are. But Congress, from what I understand, and I don't follow this as much as I probably should, but I understand that the House has already approved this bill that went through the House, and now it's before the Senate. And I think the Senate is looking to make a decision by they're saying by the 4th of July, we may see a decision on this bill. But I do know that there are going to be other changes, not just with solar in this bill, from what I understand. And I don't know, Ben, if you want to share a little bit of what you found as you were doing a little bit of research with these tax credits.
Yeah, absolutely. It's the ITC credits that we have for both residential and commercial. And the bill, from my understanding, what's passed in the House and it's going to move on to the Senate is that they would end the extension that Biden did to, what was he going to, 2032? And maybe the ITC for the residential would end at the end of this year. And then the commercial side, it would, come to an end at the end of 2028 into 2029. And that would end that 30% tax credit that we've all been enjoying, is what I understand. I mean, anybody that's been in the solar industry for a while knows that this has always been something that's come up and down, as each administration has been in and out of office. So just wanted to kind of get your guys' take on this. Everyone has their different perspectives, but would love to just get your take. Anybody want to chime in?
I think it's important to kind of see how this would impact our businesses, right? Like, I don't know that I haven't sat down and had a long pondered about what's going to happen if this does go through. There's going to be less demand now for solar, I think. I don't know that it's going to impact commercial, which maybe there's a shift over to more commercial, which frankly have seen in the past year or two. Inherently, there's been a shift over towards more commercial projects. I think it's getting more and more complicated, as Peter talked about, with lending sources. I think it's become more and more complicated to be able to do residential, and it's getting more and more competitive on the residential end. So I see that there's an inherent shift over to commercial, but I don't know, some of you on this call, I mean, is the margin so tight that a 30%, if you lose that 30% credit, will it affect the ability to do business? And I think that's what everybody's kind of licking their wounds and wondering how that's going to really impact everybody. You know what I mean? So yeah, maybe what are your guys' thoughts? I see Blake, you're typing. If you want us to open up your mic, you're more than welcome to chat a little bit about what your thoughts are there.
Your mic's open, Blake.
We putting him on the spot.
I'll allow your camera, but I won't force your camera. Anyone else, if you want to raise your hand? Oh,
it just cut out.
Sorry, I'm also kind of dealing with a cold right now. So, but no, I think as it's posed, I think we're going to definitely see trouble both residentially and commercially. Obviously, there's a lot more to fall back on to help qualify commercial. As we talk about, the various tax implications that can be used for commercial that help it, but residentially it's going to hurt. Then you're also looking up the other side, the manufacturing hits that came along with the change to the past bill. Those are going to be very painful too. We've put out a lot of funding out for these manufacturing companies that come and build plants, and now we're kind of pulling the rug out from underneath them, and that's going to hurt our industry a lot. And so I think there's a lot that needs to be done to kind of hopefully fix what they're proposing in the Senate to hopefully get things moving in the right direction. But overall, commercial still is going to be a good play, and residential still be there. It'll just be a little bit harder. We'll have to get a little bit more innovative to kind of make things work. But generally, solar will survive as we have throughout the years. There's, always new humps to the solar coaster.
Yeah, no, agreed. And, and maybe Pete, you can have some insight here. I mean, if there's a 30%, if we lose a 30% tax credit, where is that going to come from? I know sales, everybody talks about, how much money sales are making in the sales, mostly on the residential side. And do you think that they're going to be seeing a decrease in what they get? And will that inhibit their ability to want to go out and sell more? I don't know. And maybe, Pete, if you have some insight, or, Tua, looks like you raised your hand.
Yeah.
Go ahead,
So
Tua.
I'll just chime in here. So this is, I have a good relationship with a local bank here in Utah, and it was really interesting. So several years ago, they had decided they wanted to lend on resi solar projects. And so they were very methodical with it. They only opened it up to, a few companies, right? So they had turned on the spigot, and, it was just traditional lending on it, right? So there had to be some sort of down payment from the customer, right? But they ended up having so much business, it became too big of a piece of pie of their bank portfolio. So they had to shut it off, right? And so, with the tax credit going away, I think it just, I think it just goes back to my opinion. It probably goes back to more traditional lending with smaller regional lenders, right? Because in talking with him just last week, I said, "Hey, man, are you watching?" He's like, "Yeah." I said, "There, a lot of the finance companies were built on the back of this tax credit, right? And so if that goes away, now they've got to pivot, right? And so for him as a bank here in Utah, like they weren't relying upon that, right? So they can offer great terms on their own thing, and still make the funding happen. So it was interesting to hear him talk about like, yeah, we're watching it, and there's probably a big opportunity for guys like us to jump in and fund part of that space there.
So you're thinking that some of these finance companies that are in place now, like the LightReach and Sonova, and they're going to wind up having to pivot, or maybe they won't be as prominent in lending as some of these local banks would be because of this.
I do. I think the fact that they have to pivot so much, it's just going to leave the door open for, these regional banks and lenders to come in and be like, hey, this is what we can do. Right.
Right.
And that may
Huh.
lead to more competitive rates, more competition, or
Yeah.
at least give us more options than these big companies, these big titans that can come in and kind of dictate the market. Yeah. So yeah, that's why I love these types of calls, try to assist each other and these
Yeah.
different ideas that we have and different avenues to keep in business.
Agreed. Catherine, did you have some thoughts?
Yeah, when I got into solar in 2005, there wasn't solar loan companies and solar lease companies. There were people getting home equity loans, just standard home equity loans and home equity lines of credits, or just refinancing their home to pay for the solar. And I think we will go back to a lot of that. I think in the end, I've seen this over and over again with changes to solar tax credits, changes to rebate programs, changes to net metering programs, and everybody runs around and screams like the sky is falling. The sky has never fell. The industry has gone on. I don't think it would be pleasant if this passes, and I don't want to see it pass. And I hope the Senate, if they do pass the whole bill, rewrites this part of it, which is highly likely. But in the end, and maybe I'm just too much of an optimist, I don't think this is definitely not going to kill the industry completely. It might contract a little bit as it has in the past, but we'll all still be doing our thing.
Do I hope so? Rich, did you have some insight?
Yeah, I really just kind of wanted to back up what Catherine was just saying. I don't think the sky is falling. I don't think it will fall. I don't feel that at all. I've been in this business for about 25 years now. So I've seen the worst of it. And maybe this is a different monster, but I've always had the feeling, it's not really a feeling, it's fact, that we may see the sales engine change just a little bit. There's obviously been many sales organizations coupled with financial entities that have taken advantage of the ITC. So it'll be interesting to see how that changes. I mean, the money is in these projects. I'm speaking residentially. The money is actually there. It's just been allocated to more of the sales entity than it should have, disproportionately. And that often being about 25% of the project. So you're not looking, too much difference there.
So if we get rid of the sales reps,
well, I'm just
we
saying
would basically replace the 25%.
I'm just saying that the sales
crazy.
engine, the sales engine needs to change. They need to adapt, and there's money there. How much is debatable, but it's not like we're going to give up the full 30%. Like
Right.
there's some give and take that can happen. And back to just agreeing with what Catherine said, I don't think the sky is falling. I think we can squeeze it somewhere.
Yeah, I mean, when this initially came up a while back, and this is going back maybe 10 or 15 years, I remember when I was working at a solar company, and they all said we're almost at a point where we can get our cost per watt down where we don't need the credits anymore to make money. And I think the cost per watts has come down significantly since then. But I think, maybe the cost of sales has gone up. And so I think people will make it work. And I think you guys are right? At least from my perspective, right? Catherine.
Yeah, and one more thing I want to add is tell your customers that the sky is falling and that they have to sign up right now, or they're not going to get a tax credit ever. And just
That
use
will
this
keep us
as the
busy through
opportunity.
the end of the year for sure,
Yeah,
right?
yeah, just use this opportunity to sell, because every time it's almost gone away, or some other rebate program or net metering change, it's always this huge influx of business. If you can, light a fire under your customer, use this
Yeah.
to light the fire under the customer.
Yeah, there were certainly a lot of companies online when I was searching for this, when we were researching it, that said, and you can touch base with us because it's going to take several months to get your project installed. So you need to start now, right? So yeah, that everybody's using it to their advantage, I suspect. Tua.
Yeah, I'll echo what Catherine just said. Is, on the commercial side with some of our projects and credit buyers, there's enough, uneasiness on both sides where the credit buyers are like, because part of the bill is the transferability would go away,
Yeah.
right? And so if that transferability goes away, well, now the buyers of credits who were on the fence, they're like, give me everything you got, right? And so for us right now, it's finding projects that have started or are going to start here really soon that will be eligible still for that credit. So, like she said, like it's almost like we just call people and they're like, hey, how much do you need? Right? Okay. Right. How big is your project? We're doing this a lot right
Yeah.
now, just in case, right? Now, if I don't know that everything in the bill is going to pass. I don't think it would, just because there's so much money that's flowing back and forth between industries, and there's so many hands in the pot with this that I think it'll be some version of what we've already had. I don't know that the whole thing's going to get killed, but like Kevin said, hey, this thing could go away, right? Let's try to figure this out right now, and
well, we're ready to bring it on. I mean, Catherine and Heath, they're looking forward to all of this volume coming in, right, guys? And Greg, right?
And just to reiterate too, pivoting and diversifying, adding EV, again, chargers to your commercial projects, adding battery storage. There's a lot of ways to add more to an existing customer, right? To offer more services and to always pivot and always just being customer service oriented, like Peter talked about, the support and the customer. So you guys can offer that to your customers. It's one of the reasons why I'm here at Whistling Consulting, is we truly care about people, and communication and customer services is second to none. And Scott really drives that home on every single level in our company, from the bottom to the top, to from side to side, from diagonal to diagonal. Scott is always talking
appreciate
about
that,
how
Ben.
important it is. Yeah, and it's
Appreciate
why he's
that.
been so successful, and why we're working with you guys. We really appreciate everything you guys have contributed.
Yeah, thank you for all that you guys do. Well, I think we're just about out of time. I know we all have busy lives and we have to get back to work. And I do appreciate, all of you who participated today. It's extremely helpful, and I think we've learned a lot on our conversation today. So, if anybody wants to reach out to any one of us, or Rich or Sue, or anybody who talked to put his contact information in there. If there's any things that we can help you with, just drop your information into the chat if you want to, and then maybe you can drive some business this way. But anyway, thanks again for all you guys do and in the industry as well, and moving renewable energies into the future, and hopefully we'll all continue to be successful at what we do. Well, thank you guys. I appreciate it. Have a
Thanks,
great day.
guys.
Yep.
And two, if you want to drop your information in, if I've seen it yet, I'll keep the meeting just running just a minute longer.
Yeah, I think he did
Anyone else
drop
that
it
wants
in
to drop it?
earlier.
Did you drop it?
He did.
Oh, you did. Sorry, I missed that. Perfect. Thank you.
All right. Thank you, guys.